I know the reason you have been losing in the Forex market consistently, blowing account all the time. I was there. I've been doing the same mistake. And the good news is the information that has actually been holding for a long time. I'm going to be sharing this in this video so that you can benefit from this. I'm actually going to give you this for free. And if you watch this video until the end and you practice everything I'm going to be showing you in this video, I promise you're going to be changing the way you actually trade, non-blowing account and no more losing. So I started by telling my traders that when you go to your broker that you are using and compare between the withdrawals and the deposit, then I think your withdrawals actually should be more than the deposit, and that's how you become a profitable trader. Let's, for example, then show you something that is very important when it comes now to risk management, how you enter the trend, where to enter, and that is the most important part. So when you actually want to have the entry, assume now, I know so many people know how to do technical analysis and all that. If you don't know, I have created a lot of videos in this channel. You can actually go there and go through them, and you actually know how to do the technical analysis, fundamental analysis, just for free. Now when it comes to analysis, I'll assume now let's just discuss this chart that you can see around in the screen here. Now we have this chart. This is the market that was in the downtrend, but what the entry we are waiting is to short this market when this entry actually comes to the level which is actually 1840. So when this price comes here, I'm going to be selling. So that is what this chart says, and it's placed the stop loss around this area. So this is the stop loss and this is the target profit. There are a lot of reasons that you can actually put this in how you actually have to do this first. So as a trader, the first thing that you actually have to identify into the market is what we call now the entry point. Have you identified the entry point? Yes, this is my entry. So there are a lot of things that comes in when it comes to the entry, and when you get the entry point, it can either you are going to be using the instant market execution or you are going to be using the limit orders. That can be buy, limit orders, all those orders. So some orders that are actually going to wait, and others you are going to take immediate action. So we're saying that the most important thing when you actually have this entry is actually creating an alarm when that market comes to that position, so that you can't put the trend and wait for the many days so your order to be executed. It's very nice, it's very good when you actually know the market comes to your level, because sometimes the market can come to your level, but maybe there's some news that is coming up in less than a few minutes, and they can actually influence the market to continue going down or continue going away from where, or maybe hit your stop loss. So that is the most important thing that we said in that class. Now look at this. After identifying the entry point, which is very important, the next thing that you actually have to identify is not the TP that you actually have to do here. You're not going to be looking at the how much you can make in the market, which is the most mistake that is actually made by the beginners. They go to be looking at the what can we make in this market, what is in for me in this market. But no, this is not what we are going to do. What you're going to define here is how much you can actually do right over here. Assume, let's just work with $100 account. So if you have $1,000 account, the first thing that you're going to do here is simple. You are going to say, I wanted to risk only 10% of this account. I'm going to be losing. This is my stop loss. This is the maximum I actually want to put in this account. If this is your maximum that you actually want to put in your account, is actually very simple around this area. So the next thing that you're actually going to define here is very simple. The 10% of this is actually how much is $100. So that is the maximum you can actually willing to lose in this account. So if this is your $100 account that you actually have here, then this is going to be your stop loss. So this stop loss from this area to here should be $100. So some people just go there and put the stop loss and just stop loss just like there. No. You actually have to define first the amount, then we know how stop loss you're going to be using around this area. And you know how to calculate the stop loss is very simple. If you have the point, you will just calculate it by the point, then you multiply times the lot size. It will give you either stop loss S stroke L. So this is what we have. So we want to see how much we can put the stop loss so that the maximum losing point is actually going to be $100. And here you actually The first thing, because now you have this amount that you have defined, that is the maximum you have to lose, and now you are looking for the lot size. But here you can get the point, because you have identified what the stop loss. Now this is the most important thing about the stop loss. The first thing that you're going to be doing about the stop loss is to make sure, for example, you can see we have the stop loss around this area. We have placed it above, around up there. The reason we could not put this stop loss around this area is because there is possibility that this market can come all the way to this position and test that region. Okay, it can come and test this end that you can see around this area, and if it just tests that one, the market, remember, it can go like this. It can come all the way and then return around this area, and if you place the stop loss around this area, your stop loss will be easily touched and you'll be kicked out of the market. And if the market reverses from that, you'll be losing, and it will be a very bad thing that you actually have placed there. So it's very advisable, first of all, to make sure that you identify where to put the stop loss. After identifying the amount of money you want to lose, after identifying the money, the next thing that you identify is now where to place the stop loss. You have placed around this area. Okay, and now if you look up from this entry, I think this is good, from 1840 to 1855, you now have to know how many pips are those, how many points are those ones that can actually make me now to just be losing this amount of money. Probably that is actually going to be $100 like that. So if you subtract between 1855 and 1840, okay, you get how much? You get 15 times 100. You get how many points? You're going to be getting 1,500 points. Okay, now you have 1,500 points. You subtract from there is now to the that is actually the stop loss. So the stop loss is actually placed at 1,500 times the stop loss times loss size is equal to $100. Okay, so if you have this one, it's very simple now to know the loss size, the stop loss that you're actually going to be using here, because you are going to be saying divide by 1500 divided by 1500, so that you can know. And it's very simple month that you can actually do right here. Let me just do this on my phone. Okay, let me do this right on my phone. What is 1500 divided by 100 divided by 1500? So the maximum losses you can use here is 0.6, 0.06. You can even put 0.7, although we don't have that one. That is micro lot, that nano lot that we have. But in case you just want to use, I think you can put something like a maximum of 0.7 lot. That is one that you can actually use here if you just round out. Okay, so we are going to put 0.7 lot here. Now you have identified now the stop loss, and now that is the maximum you are going to be losing in this trend. The next thing is now to identify the entry. Remember, comes after doing all your strategy and identifying this is actually the good point to put the entry. Now your stop loss is placed far away. You have known where it cannot be touched. When the market just go to that positions, and then that is the amount of money you're going to lose, $100. Now the next thing is to identify the most important part, which is the risk reward ratio, which is the profit now, which is actually going to be around this area when this market reverses. So when this market reverses around and goes all the way here, then you can see the distance between these is actually like 2. If you actually get from 1840 to 1810, those are actually 1840. Those are actually, how much is that? That is 3,000 points. And you can see our stop loss was 1,500, but our TP is how many points? 3,000 points. And the most important part is very easy to know how much you can make. So if you are losing to 100, it means now we'll be making how much? We'll be making $200. So the profit here will be $200. So our profit here will actually be how much? $200. And you can see the moment you actually sort the stop loss first, then the lot size, the profit actually will sort itself by identifying, where I'm going to put the stop loss is far away, and this amount of money that I want to risk, I don't want to put just in hourly. You identify the stop. You don't just put the loss size in hourly just like that. You make sure that you follow the procedure, how it just exactly like that. Practice with this small account that you have. It's not basically you must have $1,000. You can practice this on $100, and maybe you're going to risk 20, 10. Define where you can put a stop loss where it can't be hit, but don't place it so far away, because there's high possibilities that your profit or risk reward ratio cannot end up or something like that. But make sure at least you are identifying the good entry. I know your stop loss will not be very far, and it will actually be somewhere where it cannot be hit, or where the market cannot proceed to go any further. And the moment you just do that, I think everything is going to be so fine. You're going to be having good entries into the market, and you're going to be stopping blowing the account, and you're going to be stopping how to losing money or on the trend every time. Just practice. If you love this, make sure that you follow me on our social media platform, TikTok, Instagram, and Twitter at DanTech. If you have any question, let me just know if you actually knew this, or how have you been performing your risk management or your entries or after analysis. I'll see you in the last one. Take care.